So today we have Greg Scully, Manager of Nonprofit Resources and Community Partnerships at 501 Commons. We also have Keith Swenson, Deputy Assistant Director, Office of Economic Development and Competitiveness at the Washington State Department of Commerce. We also will have two business owners here with us today who will share us their stories. We have Thalicateur, founder and CEO of Mightygum, and David Belinda, co-founder and operation manager of Wakalima. So in rounding out our program, we have Mccarthy from the National Development Council as well. So now I would like to turn it over to you, Greg.
Thank you very much, Christina. And it's a pleasure to be here today and be in partnership with One East Side. I'm Greg Scully with 501 Commons. We are based in Seattle, but we serve nonprofits on the East Side, of course, and also throughout Washington, Oregon, and Idaho. We've been around for way over 20 years and started out as a volunteer-driven organization with a few staff people, and we now have over 50 staff. You can visit us at that website, and I'll put it in the chat also. Go ahead and go to the next slide. Thanks. What I wanted to talk to you a little bit today is just about 501 Commons very briefly and what we do, and give you a couple examples of some resources that we offer for nonprofits, and then how to get in touch with us. So these are the primary things that we offer on the left side of the column here. Is management and technology consulting for nonprofits that need those sort of services. We also do what I call our back office support services. So if you are a small or a large or a medium-sized nonprofit, or you sit on the board of one or something, and you know that you need some technology support, but you don't want to hire a full-time IT department or something, or not at that point in your life cycle of your nonprofit, we can do that on the back office, or your finance, do all of your bookkeeping, file your taxes, those sort of things, and also HR. We also have an HR support team that become the back office HR support for organizations. We also have a lot of training and learning programs for people to learn about how to run a nonprofit, or how to be a good board member, or just a wide variety of different things. Again, those are also on our website, and I'll send you those links a little bit later. We have leadership development coaching for nonprofit executives and their staff. And the last thing I'll mention right here is our information referral line, which I actually run. And so people call in, contact us, sign up, they get an appointment with me, and I will help them for free on a one-on-one basis, and provide them the technical support wherever they need to go. If you can flip to the next slide, please. So here's the core of our services. You don't need to read all the tiny print. So it's really just basically these sort of things, of governance to fundraising, communications, planning, and management. All of those things are really the wraparound that we do. What we're about is helping, we are a nonprofit, and we're about helping other nonprofits to grow and thrive. We want to see them do that. So all of these services bring those things together to help your organization grow. So at that, I will skip the next. There's another point of our website, but I'll skip to the last slide here of what a nonprofit healthy ecosystem looks like. Those are all of the things that we, again, offer at 501 Commons. I apologize for this very, very brief introduction to it. You can find out a lot more at 501commons.org. And again, thank you so much for coming today. I really look forward to the conversation about the Flex Fund and hearing from the other professionals here. But I will be online for the rest of this conversation and afterwards to help out in any way that you folks can. You can always reach out to us. Thanks so much.
Well, thank you, Greg, and you guys are such a wonderful resource. So thank you for that highlight of your services. So next we have Keith Swenson from the Washington State Department of Commerce. Keith, I'm turning it over to you.
Great. Good afternoon. Thanks, Christina. I really appreciate it. And thank you, everyone, for the time this afternoon. I have the pleasure of doing a quick introduction to the Small Business Flex Fund. I'm going to do a quick overview, talk a little bit about eligibility and also terms. And then I'm also excited to see the rest of the program too, as we have some fantastic speakers, and NDC is going to walk through the portal, which is really exciting as well. So the Small Business Flex Fund is a public-private partnership This was actually originally stood up by the governor using CARES Act dollars, a $30 million investment into the fund to seed it. And then we went into a partnership with NDC in designing and building out this fund that we are very close to actually securing our target goal of $100 million in lending capacity. And that's a great thanks to all of our private sector partners in that front too. The goal of the funds to increase access to capital and support the smallest businesses in underbanked communities across Washington. You can go to the next slide, please. One of the key developments in this fund is utilizing, access-friendly portal from the business perspective. Small business owners can access this program. It's super simple, easy, and one of the powerful tools behind this portal is it matches them with potential lenders, and also lenders within the fund have support from technical assistance providers as well. Go to the next slide. Our participating lenders have decades of experience in serving Indigenous, rural, and immigrant communities of color across Washington. You can see on this slide here, we have Ascendus, Craft 3, Evergreen Business Impact Capital, and Evergreen Capital, and NDC. And actually, we've introduced a new credit union that's actually going to be leaning in, OB Credit Union, which services the South Puget Sound area. We're excited to have them on board to kind of build out some of our capacity as well. They've all been fantastic partners. And what I want to say is you will notice a lot of them, or all of them, are CDFIs, minus OB as a credit union. And their mission in scope of what they do really, really well is working with underserved, underbanked communities around the state of Washington. So it was a pleasure to be able to partner with them and really being the subject matter experts, if you will, on working with businesses that have a lot of varied business needs and requirements. You can go to the next slide, please. As I mentioned before, one of the powerful tools within the Flex Fund is this ability to match our lenders with assistance from TA providers. So local businesses get assistance through not only the lender, but also if they need, language support or other professional services to help them really be, borrower ready, if you will. The fund connects local community lenders with a network of business advisory services to support full small business ecosystem in Washington. Next slide, please. And here is the Small Business Flex Fund eligibility requirement. It's really simple. Fewer than 50 employees, annual revenue of less than $3 million, experienced a direct economic hardship due to COVID-19. This is the CARES Act funding requirement from the federal government, and have been in business for one full year prior to June 30, 2021. One note I'd like to make, since we were in an era for a significant period of time, really, of just so many grants and money going around the state, it is important to know in this fund, it is not a forgivable loan. This program is not associated with the federal Paycheck Protection Program like PPP or other SBA programs. With our partners in the private sector as well, the borrower will need to pay back the full amount of the loan with interest over a 5-year term. That's an important note. Next slide, please. The loan product's tailored to meet the credit needs of small businesses through recovery. We tried really hard in the development of this fund in consultation with NDC as well, and really providing a low barrier, easy access product. And a couple key barriers we want to address were things like fees and pushing out the loan other than interest payments for the first year. So I think we were able to achieve much of that. The interest rates for the 60-month term is 4% fixed interest for small businesses and 3% fixed interest for nonprofits. The payment term is, as I said, 60-month term, but the first 12 months it's interest only, hopefully providing a little more flexibility to the business on the payback schedule. The use of proceeds are for working capital, including payroll, operating and emergency maintenance, utilities, rent, supplies, all that kind of stuff. So it's fairly flexible in the use of funds. As I mentioned before, no upfront fees, no collateral required. That was also an important aspect from the state, as we heard through many listening sessions with small business associations and business owners themselves talking about that challenge. The loan amount is up to $150,000. Sorry, one back. So this is the Magic Portal, which I'm really excited for Anne and her team at NEC to walk through. I think it's a fantastic tool to help the business owner who might actually not quite know what their need is, but helps them walk through this process so they can get matched with a CDFI lender. You'll see on top of the screen here is the URL. We can simply also just Google Small Business Flex Fund. I believe it's the first, if not second, selection that pops up. So this is a brief and quick synopsis of this program. We're really excited about it. I think it's been a very useful tool as we actually enter this phase of recovery. And so thank you very much for the time, Christina. I really appreciate it. Excited to see the next participants.
Absolutely. Thank you, Keith, for that overview. That was great. And next we have Matt Thalicateur from Mightygum sharing their story. Matt, I turn it over to you.
Yeah, sure. I don't have any slides to present. I'm just gonna share my experience. So I am a small business owner based here in Seattle. I actually live in Newcastle. And I started a functional chewing gum company. I worked on it for a while and I launched the business February 2020. Yeah, 2020, right before, a month before the whole pandemic and the shutdown. And so, as you can imagine, that put a bit of a wrench in my plans for rollout. And I realized very quickly that in order to scale my business, I would need to raise capital at some point. And although I didn't quite need it in 2020, I needed it in 2021. And this summer, I started looking at options to get some sort of capital. I was looking at banks, and I'd walk into a bank and I quickly realized that I didn't have enough of a track record, or didn't have enough of whatever they needed in order for me to be considered a justifiable bet. And then there were other opportunities, which were to work with these accounts receivable lenders, where they charge you like in the double digits in interest, just so that you can make a payment on your PO for an accounts receivable. So that was one route I was exploring. And then the other thing was like, okay, do I just start diluting my business to some degree so that I can raise some capital and use that capital to keep the business going? And somehow, some way, I got connected with the folks here and had a chance to apply for a loan. I worked through Ascendus, which is one of the companies that was on a prior slide, and it was really simple. It was just providing information to just show that, hey, one, that I was a minority-owned business, which I was certified through a certifying body, and that I was a legitimate business. I was generating revenue, and outlined the business case, or just, it wasn't even a business case, I say that, but it was really just an email saying like, hey, this is what I need the money for. This is how I'd use the money and over what time. So that is basically all I did. And a lot of it was phone call with the account executive that was helping me through this, because I'm not I'm not very like financially savvy. I mean, I know enough to know when I'm getting not a good deal, and this was a fantastic deal. At the end, we got the money that the business needed. We got it at 4%, which is just awesome. And the other benefit was that a lot of times, at least in my business, most businesses, it would take the moment from when you get the capital to when you can actually utilize the capital to create the inventory or create whatever change you need to make in your business, and then to actually recoup the benefit of that capital, it takes a while. So the way that this loan is structured, and in fact how mine was structured, the first year I only had to make the interest payments, and after that year I had to actually start paying off the principal of the loan. So they gave me some time to actually use the capital and actually start using it to kind of get my flywheel spinning. So yeah, overall, it's been a great experience. It's been an absolute business / lifesaver. Yeah, if you're thinking about going through this process and requesting or applying for a loan, I highly recommend it.
Great, thank you, Matt. I think these stories are very helpful to the folks that are on this webinar today and the ones that are going to be listening tomorrow. So thank you very much.
Yeah.
So next we have David Belinda from Wakalima.
Hey, hi, I'm David Belinda. I'm with Wakulima USA. We are a nonprofit that supports immigrants from East African countries of Kenya, Uganda, Tanzania, and Zanzibar. I want to say thank you very much for this opportunity to be able to speak, because we have really had a wonderful time in supporting our organization as a nonprofit the last year with the funding that we received from this loan application. It was smooth and easy. There was a lot of very good follow-up with the team that was assigned to work with us. We did get a 3%, and our board was open to accepting that as an opportunity for us to keep our organization running. We are a very small organization. We started about 2016 and have been having a lot of difficulty when getting money. We support healthy eating, wellness in our community. We support members of our community with their mental health. We have a youth program, and we also do advocacy. We do a lot of cultural relevant foods for our immigrant population. We are mainly based in King County, and now we are heading to Pierce County. So we did really receive a great opportunity for us to be able to keep payroll and also to keep our office space going, because as a small nonprofit, we were really struggling trying to find funding. So we want to say, thank you very much for the opportunity and for the funding that we received. We've been able to maintain our staff. We've not been able to hire because of lack of funds, but we're still trying to look for more funding to continue supporting our organization as we move forward. So I just want to say that there was a very smooth process. The people are very friendly, and because we do not have a grant writer, they were very, very supportive in working with us, like just the way you'd walk a baby from the first step. And the money was available like really quickly, as opposed to a lot of spaces where we have to wait for months, even to hear feedback that you will not be paid, you will not be getting any money. So I want to say thank you so much for this wonderful opportunity. We are very grateful, and we just hope we can apply again. This is really beautiful. Thank you.
Thank you, David. Thank you very much. And next we have Connor McCarthy from the National Development Council, so NDC. Connor, I turn it over to you.
Thanks. I'm just going to do a screen share so we can get the presentation started. So, 1 second. There we go. Okay. So thanks again for everybody that's here today. We're going to focus this presentation building on what we've discussed thus far and really kind of get into the nuts and bolts so that everybody that's here today can get a sense of what's going to be expected throughout the process and just how easy this process will be from start to finish. You already heard from some of our borrowers that that process was quick, efficient, and they were able to get access to a long-term, reasonably priced rate within a matter of days and sometimes. So without further ado, let's get started. Again, we're going to cover just the basics. What is the Flex Fund? We already went through a little bit of that, but we're going to get into the rates, the terms, why that's so important for you as a business owner. We're going to talk about basic eligibility. Obviously, nonprofits and for-profits are eligible. We'll talk about how to apply, what that online portal looks like, and how you're going to be moved from one portal into our application system, and how we'll package and then underwrite your loan. We'll also talk a little bit more about the company that I work for, National Development Council, some of the work that we do specific to Flex Fund, and then some of the work that we do throughout the country. And then really what we're going to do is kind of lift the curtain and just describe to you how we make a decision on a loan. I think any business owner or any nonprofit executive director that's empowered with information is going to be all that much better for it. So we want to give you some of the tools, just to have an awareness for how we're going to come at the decision that we make when we're going through a flex fund decisioning process. It's quick, it's efficient, it's simple and straightforward, but we find that if you understand a little bit of it, that'll make the application process all that much more effective and easy for you. So a little bit more about National Development Council. We kind of have two core components to what we do. We provide capacity in the form of training and certifications to economic development professionals, and we also provide technical assistance or consulting services to municipalities and to states, cities, counties throughout the country. We take that technical assistance and training, and we then try to build capacity with it through providing financing in the form of the Flex Fund, is one of the programs that we assist in running, or we provide financing and other programming through any one of our small business lending products, affordable housing, or our housing and economic development programs. Of course, if you want to learn a little bit more about NDC, we'll provide the link to our website afterwards, but I just wanted to kind of tell you guys a little bit more about who we are and what our work is, and how Flex Fund is directly correlated to the mission that we seek to serve and the work that we execute on a daily basis. We went over this, so I'm not going to spend too much time on this, but the Flex Fund is a very powerful tool that can provide up to $150,000 maximum loan. It's for small businesses or not-for-profits. We're going to underwrite the loan size, or we're going to calculate the loan size based on 6 months average revenue for any period prior to the date of application, and 6 months average expenses for nonprofits. So I'm just going to pause on that really quickly so that everybody understands. 6 months average revenue is going to be how we determine the loan amount for a for-profit business, and then 6 months average expenses is for non-for-profits. The non-for-profit rate is slightly below that for businesses. Obviously, non-for-profits as a design and by design are seeking to not be profitable. So we pass on an interest rate savings to those non-for-profits. It's a 3% fixed rate. And then for-profits, still very reasonable, 4% fixed rate. The term is 5 years, but you heard one of the business owners discussing this today. We give a 12-month interest-only period. It's a 1-year interest-only period. And why that's so important is that the loan is going to amortize after that 12-month interest-only period for the remainder of that 5-year term. But what we're trying to do, since this is a COVID relief program, is we're trying to provide both business owners and not-for-profits the ability to phase into that loan, to grow into that loan, and to have some time to recover. So for those first 12 months, you get that interest-only period. That payment is going to be significantly lower than your principal and interest payment on the amortization of your loan. And what that means for you as a business owner or as a not-for-profit executive director is that initially in those first 12 months when you take on that loan, you're going to have some time to have a lower payment and use your businesses or your non-for-profit's cash flow to service other needs that you might need as you work to kind of stabilize and get out of the impacts and effects of COVID-19. We also talked about the security collateral. There's no minimum collateral requirement. So that's really important. We're not going to be securing personal residences, homes, things of that nature. None of that. We're trying to make this as painless as possible. We will take a UCC blanket filing on all business assets, regardless of position. So that's just a best perfected. Doesn't mean too much for you, the business owner or the non-for-profit, pretty standard. We'll also take a personal guarantee for our for-profit businesses for every owner that's 20% or more. Again, nothing too surprising there, pretty standard. There's 2 eligible uses, working capital, and we'll talk a little bit more about working capital and what that means in the slides that follow. A lot falls within that catchment, so just keep that in the back of your head because we're going to have a whole slide on what working capital means. We just want to encourage our business owners and nonprofit executive directors to think about all the different things that can fall into that uses of working capital. So again, we'll talk a little bit more about that in a second, but I just kind of want to put that idea into everybody's head. You can also use it to refinance high cost debt or debt with burdensome terms. That's a really powerful tool, especially for those business owners that were overburdened with debt through the pandemic and are looking to find a way to get a more reasonable rate and a longer term to get out of high rate, short-term usurious debt. I think it was referenced by one of the business owners that there's a lot of unscrupulous lenders out there, and that this loan product can provide a really powerful tool to reposition a business that might be performing well, but just unfortunately got saddled with some poorly structured debt. and needs really kind of a second chance, if you will, to reposition themselves and to keep doing what they do best, which is run a business, hire employees, and keep contributing to the state of Washington and its wider economy. So again, just kind of, I'll give you guys at a glance, 60-month term, 4% for small businesses, 3% for nonprofits. At the beginning of the fund, we had a slightly longer term of 72 months, but we've had success with the fund and we've been running it to date to the point that we only offer a 60-month repayment timeline, still incredibly reasonable. And you're still pairing that with that really great 4% for small businesses and 3% for non-for-profits, which is fixed. I just wanted to revisit this concept of working capital. There's a lot that falls into that. What we see, especially with some of our applicants, is they try to do some of the underwriting for themselves. And while we perfectly encourage that, and we think it's great for business owners and nonprofit executive directors to be empowered and understand more about the financing of their organizations, I just encourage everybody to think about all the different things that fall into working capital. That can include any operating expenses, rent, payroll, utilities, insurances, COVID-19 supplies, PPE, modifications to protect the health of your employees, inventory and property taxes. So there's a lot that falls into that. So if you're thinking, oh, I don't need working capital, just think about, do you need support for any one of these various uses? If you do, then you need working capital and you would be an excellent candidate for the Flex Fund. I want to talk a little bit more too about eligible borrowers. We've made this program open to a lot of different borrowers, and that's what it's designed to do. It's designed to assist a lot of different for-profit and non-for-profit applicants. So I just kind of want to go through and talk about eligibility and what that looks like. A loan applicant and any business owner with more than 20% ownership is going to have to attest to some basic eligibility things. They include that the business has experienced a direct economic hardship as a result of COVID-19. We call this kind of the COVID impact statement. We're going to ask a borrower, or rather a business owner or ED of a nonprofit, to submit just a statement in which they discuss to us what's happening to their business or their entity and how they've been adversely impacted by COVID-19. It can be simple, a couple sentences in the form of a paragraph. It can be emailed back to us, or we can provide you with a template to write that down. But let's say you're running a restaurant, obviously through 2020 and even parts of this year and 2021, you were impacted by COVID. You had to decrease the amount of folks that you could have in the space, the amount of patrons that you could bring into the space. So, of course, that was a moment in time in which you were impacted by COVID. You just need to describe that to us. Tell us that story so we can take that story, save it to the file, and have that in the file to say, hey, this business or this non-for-profit needed assistance from a COVID-19 program because they were being impacted by COVID-19. You have to be in business for at least 1 year as of the date of the loan application. So that could be 1 year from today's date. It doesn't have to be, 2019 or 2020. It could be 1 year from today's date. You can't make, of course, any false claims or misrepresentations of data. We're relying on you, the business owner, to attest to us that you're presenting accurate and honest information. Obviously, we're going to use that information to make some decisions when we underwrite. So if there's false claims, that would be a problem. You have to be located, obviously, in the state of Washington. You have to have gross revenues of less than $5 million per year and employ 50 or fewer full-time employees. So for a lot of our small businesses, this is an easy one. You'll fall below those revenue thresholds and those employee or full-time equivalent thresholds. And then it has to have not applied for any other CDFI for a program specific to Flex. What we're trying to avoid here is just double dipping. So if you're applying from one CDFI for a Flex fund, since there's a series of CDFIs that work through this fund, you can't apply through both CDFIs and expect 2 loans. You can only apply to one CDFI for one Flex fund loan. So businesses that are not eligible, but may not be limited to corporate-owned franchises, non-for-profit social clubs, branch banks, payday loan stores, pawn shops, astrology, palm reading, liquor stores, adult bookstores, track waging, tailor storage yards, and marijuana dispensaries. So a lot fall outside of that, but let's say that you're on the call and you might fall within that catchment. we just want you to be aware that unfortunately you wouldn't be eligible. But if you're outside of those respective areas that we're detailing in this slide, you're definitely eligible. So we really encourage you to apply. And you can apply through this URL. We're going to share this link with the group, but we just wanted to throw it up there just so you can see it. You can take a screenshot now if you really want to have access to it, but we'll share, this information, of course, at the end of this presentation as well too. But let's get into the fun part. I want to talk about application, how to apply. The business requirements, like we were talking about, was that the borrower must have been in business for at least 1 year from the date of application. And we are looking for positive cash flow for a 12-month period prior to March 1st, 2020. So namely, we're looking for cash flow in 2019. We're going to talk about what cash flow means in a second. So if that's a term that's sufficiently confusing and that sounds pretty banky, don't worry about it. We'll talk about what that means, and we'll take that term and we'll break it down into a really simple form so that you, the business owner or the nonprofit, can understand what that means. We have kind of some tried and true documents that we require. So I want to get everybody ready so they can get these documents ready, because we're going to ask for these documents once you make your way through the portal. You're going to have to complete a loan application, which is online. They're going to ask you to put in your social security number and your business ID or tax ID for credit reference and reference of checks with regards to personal credit and so on and so forth. We're going to collect your 2019 and 2020 business tax returns. 2021, we're also going to ask for a profit and loss statement, which could be generated off of QuickBooks or any software that you're utilizing. We realize that a lot of folks are still working on their 2021 tax returns. So we only need a profit and loss statement that's company prepared. We need that correspondence too, which describes the impact of COVID-19 on your business. That's that COVID impact statement that I was talking about. We need a 2019 and 2020 personal tax return. That's especially key for our for-profit businesses, because we're going to put together a personal cash flow in order to understand the uses, or rather the sources that you have for personal income, and then how you're covering or using those personal income sources to cover personal living expenses. So we need to see your personal tax returns in order to understand how you personally, as the principal or the owner of that business, are supporting yourself. We'll need evidence of legal formation of the ownership entity. So that could be bylaws, operating agreement, an article of formation, depending on your entity type, whether you're an LLC, a C Corp, or an S Corp. And then for nonprofits, that changes a little bit. We're going to need articles and bylaws, your most recent 990, which is your tax return, and then board authorization to borrow and sign, and if applicable, an A133. Just to keep everybody reminded, for-profit businesses, we're going to require a personal guarantee for each individual that has 20% ownership or more. So when you are getting ready to apply for a small business flex fund, you're going to go to this URL and you're going to go through this application process that's really simple, it's intuitive, and it's actually kind of fun. So it should be really easy and enjoyable, actually. It's not going to be like your traditional bank process where you have these tired forms that you have to fill out. It's going to be intuitive. You're going to use your computer from the comfort of your home. You're going to just move through this process. First question is going to ask you how much you want to borrow. You'll enter it in, and then you'll touch that big orange button in the middle, and you'll say continue. And you'll go through this really simple process, and it will work to match you up to a CDFI. Now, there's a couple of different CDFIs that are working in this program. We're hoping that you're going to pick NDC. We have this big logo that says NDC in the center. You would pick Connect with NDC, and you would be connected with us as your lender. And then we're going to just send you a little representation that we'll reach out to you very shortly, and we're going to contact you. And when we say we're going to contact you, you're actually going to get contacted by a person on the phone. This isn't just going to be all online. You're going to have somebody that's going to actually take the time to get to know you, your business, or your nonprofit, and walk you through the process. So we want to make it fast and efficient with regards to using some of the technology that's out there, but we also don't want it to be this process where you're calling up to be on hold for a long time and nobody's taking the time to know about you and your story. So you're going to be contacted by an actual person, and they're going to get the application process started for you and collect the documents that we need so that we can make a decision. We already went through what some of those documents are, but that person is going to reach out to you and get you started collecting those documents. I like this arrow because I think it provides just a little bit of an organizational template that we can use just to outline the process. Again, you don't have to be an expert in this, but we at least want you to have an understanding for our processes and our procedures so that you know the process from start to finish and you know what to expect and how quick it can be. So to start, you're going to do that pre-application where you're going to be online and you're going to be entering in the total amount of money that you need, along with some key information about your business, its name, and your contact information. Then you're going to match. You're going to, hopefully, like we said, choose that big blue NDC and match to NDC or to any of the other CFIs that you're matched to. Then you're going to be invited to apply. You're going to get contacted by a person who's going to help you through that process. You're going to complete that application when you're invited to apply, entering key information that we need, start submitting documents that we need in order to start our underwriting. And then we're going to take a look at those documents and review those documents in conjunction with you, ask some follow-up questions, and get towards a decision. We'll get to that decision and we'll hopefully approve you. And then we'll send out to you directly electronically the closing documents or the loan documents you need to see to sign and to agree to. They'll include the note and they'll include some other pertinent documents that will outline rate and term, which we've already discussed. But they'll be for your review. It'll all be done by a DocuSign. You don't have to rush out to find a printer with a PDF or anything like that. It'll all be done from the ease of your computer. And then we're going to set up ACH so that you can make automatic deductible payments straight from your bank account. And you don't have to worry about sending in checks. So it'll be kind of a seamless, quick process. This process from start to finish, if you're on it, it can take as few as 5 days. So we really are about speed and efficiency through this process because we realize due to the impacts of COVID-19, the time is of the essence, that it's not just enough to have access to a effectively priced loan and a good term, but it's also important that we get this to you and get the money to you in a fast and efficient process and in a matter of days, not in a matter of weeks or months. So remember I said to you guys, hey, like, don't worry if cash flow sounds a little bit confusing, but I want to just kind of give a little basic lay of the land for what cash flow means, how we calculate cash flow, because this is really central to our decision making when we think about a basic question. Can this business or this nonprofit support this loan that we're extending to you? Because obviously we want to get towards a yes, but we never want to get to a yes that would overburden you with too much debt. The way we would do that, though, normally is we're going to take our 2019 tax return. We're going to look on our 2019 tax at the cover page of that return, and we're going to see the profit after tax. Then we're going to add in non-cash expenditures such as depreciation, amortization, and interest. And then we're going to make some adjustments if we can. There might be some adjustments for adding back one-time capital expenditures or any sort of one-time expense that was included on the profit and loss statement of your tax return. If we can add back some of those expenses, we will, because that's going to improve the total cash flow of this business. So again, we're going to start with 2019 with the profit after tax, then we're going to add in non-cash expenditures such as depreciation, amortization, and then we're going to make some adjustments if there's some one-time expenses that we can add in. We'll then calculate your total cash flow. So that's the first part of cash flow. Then we're going to calculate what's called a debt service. That's going to include the principal and interest on your flex loan and any existing debt service that you have. Let's say you might have some auto loans or you might have some other term that's out there. We'll include that in your debt service, both the existing and new project debt service associated with the flex loan. We'll take that cash flow and we'll put it underneath, or rather over, the total debt service that we've calculated. If that figure is 1-to-1 or greater, if there's $1 more of cash flow than debt service, then that indicates to us that this business or this nonprofit can pay back their loan. If they can pay back their loan, then that's the loan we want to do. With regards to add backs, I just kind of wanted to go a little bit more into that. We will consider add backs for officers' compensation. Let's say if compensation in some years was a little bit more aggressive because sales were higher and the business owner doesn't need too much in the form of officers' compensation to cover all their personal living expenses, then by all means we'll add some of that back. Interest on any debt will be added into the cash flow because we don't want to double count it with our debt service. And on any debt that's being paid off in the course of last year, we'll take out some of that interest as well too. and we'll add it back because it's been paid off. Rent, if you pay yourself or a related party and you have a home office or something of that nature, we'll look at that favorably and try to add back rent. And depreciation, like I was saying, it's non-cash, it's a gift from Uncle Sam. We're going to add it back into our cash flow to give that business owner or that business the highest possible cash flow that it can have. So that's kind of getting a little bit more into the weeds. But again, if there's a 1-to-1, or if that cash flow exceeds that debt service, then we're getting towards a yes, we're getting towards an approval, and that's how we're going to make a decision on this loan. And really, it's that simple. It's meant to be an easy, straightforward process. We've outlined a little bit more about the documents that are going to be needed, how we're going to make a decision. We didn't want you to become credit analysts or underwriters, but at least you now know a little bit more about the types of thoughts that we're going to be thinking when we try to assess your business or your nonprofit. And if you need, of course, to get in contact with any of us, you can contact my colleague, Ann Finnegan, or you can contact me, although I have shaved off my beard, so you will get a fully shaved Connor. But I just want to thank everybody for their time today, and I hope this was helpful and provided some useful information.
Thank you, Connor. And you got the beard comment before I could, because you do look a little different.
Yeah, I know.
Looks good though. All right, so we are going to start our Q&A portion of the program. And I want to remind folks, if you're watching this on Facebook Live, feel free to post your questions there as well. We have staff monitoring that channel, so we can send the questions over to us. So, all right, I'm going to go kick it off with the first question. Let's see, it says, we've been in business for over a decade. The application portal asks if we have a business plan. Are we required to have one? We had one when we launched in 2010, but it has not been updated. Will answering no impact our eligibility?
It shouldn't impact your eligibility, so you should be able to get through the process without a business plan. I think it just asks for those business owners that are similar to that description that was just given. If you have it, it's useful. We'd like to see it, even if it's a little bit dated. So it definitely won't DQ you or disqualify you from the process.
All right, perfect. Okay, our next question from our Q&A, it asks, does your credit get impacted by applying for the loan? If so, can you build business credit with the loan?
So I think there's two questions there, so I want to answer both of them. Your personal credit, we're going to pull personal credit for those business owners that are for profit. And generally, when you do a pull on personal credit, there is a modest impact to credit, although you're getting a loan for 4% or 3% fixed. So I would just encourage everybody to understand that, you know, the costs of a modest impact to your credit are kind of associated with, are worth the award, so or the reward. So yeah, there might be a little bit of a ding on your personal credit because we do have to do a pull on that personal credit. The good news is that we will be reporting the performance on this loan to the respective credit agencies. So that should actually help you when it comes to building both personal and business credit, because you'll be paying back on a loan and performing on a loan. And every time you pay back on a loan, that generally helps your personal credit and business credit score.
All right, I'm going to the next question. It asks, I am looking for funding. Since the situation, it's looking like we don't know if it's going to get better or worse. It says getting a loan is making us nervous because the future is so unpredictable. Do you have any suggestions or advice?
Yeah, I mean, I was talking to a business banker today about that similar theme. We totally understand that there's a lot of volatility right now, and it's hard to make a decision when there's so much that's unknown. And I think we've all felt like we've been in a form of a 2-year purgatory. So we get that. That this program is designed to be fast, efficient. It's designed to be easy to access. And so I would just encourage the business owner with a flexible use like working capital, the decision doesn't have to be as momentous as if you were buying a piece of real estate or if you were buying a piece of equipment. So the program's designed for those business owners that are trying to face down some of this uncertainty. So I would encourage you to apply. The nice thing too is you don't even have to commit to an approved loan. So you can go through the application process and, you know, maybe you feel more comfortable after working with your lender and you decide you want to accept that loan, or maybe you decide you don't, but you're not any worse for it because you've learned a little bit more about your business and about a loan application process.
Yep. All right. Thank you. Okay. Our next question, it says, can I still apply if I received other COVID-related funding?
Yes, you can still apply if you've received, some of the big ones that we were talking about was PPP or EIDL. We just want to know about it, how much and when it happened. Just to remind everybody, you couldn't apply for a second flex fund loan. So just keep that in mind, but you can apply if you've received other forms of COVID relief. In fact, I would encourage everybody to think about this as part of kind of a capital continuum of COVID relief. So you should really avail yourself of the respective programs that are out there, because I think one program in and of itself isn't going to be sufficient enough to see everybody through, especially business owners and nonprofits, through this current crisis.
Here we have another question. It asks, can I use the money for growth related costs like bringing on new employees or opening a new location?
Remember, working capital, there's a lot that falls into that catchment. So if you're using these funds for operating expenses, or you're using it for bringing on new employees after you had to let employees go in the face of COVID, and now you're kind of repositioning yourself, that would be an eligible use. So the reason we had the working capital slide is because we find that sometimes business owners really can overthink this a lot. So don't over underwrite or underrate yourself out of the program. It's a light underwrite. It's designed to be that way. The uses specific to working capital are designed to encompass quite a bit.
All right, perfect. Okay, the next question asks, since the loan factors in my personal credit score as the business owner, if one of my partners has a higher credit score, could I have her instead apply?
Our magic rule gets back to that 20%. So if you're a 20% or more owner and you have a partner who's 20% or more owner, we're going to pull both. So that's kind of the magic rule. If somebody's below 20%, then we will not pull their credit.
All right, next question. I'm not sure if I qualify for minority status. Who can I talk to in order to determine this? And I know we had another question here, very similar, that asked about, does immigrants from Eastern Europe qualify for minority status? So I think we can wrap those two questions in one.
I don't know if I would be the best to answer that question. So that, I think, is more of a question specific to some other portion of kind of state programming.
Sure. Do you know where they could go to determine that?
I think Department of Commerce can answer that for them, who we work with.
Okay, perfect. So reach out in each individual and we'll go ahead and get that answer for you.
Christina, on the pre-application, when you get to the next question after that one, you'll see a list of and this is just, again, just a demographic question. So they can see a list of that. Again, generally the geography is not a criteria. Obviously racial identity is an identity, but there is the next page of the application that has those.
Okay.
I would just echo from Commerce point of view is exactly what Chuck said, for sure. It tracks along the census too.
Yeah, that's right. And just so people know, there's no advantages or disadvantages depending on where you're from or what your ethnicity is. It's just a demographic data counting question.
Got it. And I think that may have been an earlier question that I saw float through the Q&A. So thank you for catching on to that one too. All right, our next question asks, is there support for educational and language services, connectors to immigrant-owned businesses, and educational support to their families?
I think the question is there support for immigrant-owned businesses? This, obviously, if you're an immigrant-owned business, you could definitely apply through this program. I don't know if that would be specific support for immigrant-owned businesses, but you're definitely eligible, so definitely apply through this program.
Okay, and I think there was a second part that I missed at the bottom. It said ESL and culture coaches, if that helps.
Are they asking if there'll be like ESL or culture coaches? Or are they asking whether that would be funded? Those types of.
Yes. Yeah.
Yeah. I think that would fall under working capital, so you probably would be able to be funded for that. This is actually a good point, though, to describe the fact that program, if you need some assistance with a second language, that's available as well too. We provide, Spanish speaking and some other languages that we have at NEC in order to assist people that, English might be a second language and they feel more comfortable speaking in their first language, which we totally understand and support.
Perfect. All right. So I have another question. There's so many here. I was in business a little over a year when COVID hit. However, I was impacted enough to get set back to startup numbers. How would you determine what I could be eligible for based on a pretty minimal last 12 months from now?
I think that's the beauty of the program in the sense that, and this gets a little bit more into the weeds, which is perfectly fine. We underwrite based on 3 periods that I was describing in the document collection slide, 2019, 2020, and 2021. The reason we're collecting those periods is because we realized 2019 might show a more positive outlook because people were unimpacted by COVID. So that's where we make our decision on. So if something happened in 2020, especially, or even through 2021, what we really want to understand is what happened, why, and why this business is going to benefit from this loan and be repositioned so that it can pay it back. So we're making our decision when it comes to repayment ability on the good year in 2019, not on the bad years in 2020 and 2021.
All right, perfect. And this one could be a quick answer, I think. Next question is there a prepayment penalty for this loan?
There is not. So you can pay back at any time, especially if you have, if you benefit from this loan and you start having a good couple of years, the rate is fixed and the term is reasonable, but you might just not want to deal with the payment. We understand that there's no penalty to pay back a loan.
All right, perfect. Next question. We have about 5 more minutes, but we have plenty of questions to fill those 5 minutes. And just so you all know, we will be gathering those questions and seeing if we get answers, and we can send those responses out with all the materials that we have. All right, so the next question is, we qualified for a higher loan amount, but chose to be conservative and took out a smaller loan. Is there any way to get additional funding?
I believe there is actually. So you could come back to us, whomever your lender was, and you could talk to them about that decision.
All right. Next question around nonprofits. It asks, if a nonprofit has a fiscal sponsor, should the fiscal sponsor be the one applying for the loan?
No, but we'll collect some information about the fiscal sponsor for sure. So you apply as the nonprofit, but we've seen that before where some nonprofits have a fiscal sponsor.
All right, perfect. All right, next question. Can a sole proprietor of a for-profit business apply? And what advice would you give to a small business who is seeking COVID relief loans, but has low cash flow in 2019 to 2020?
A for-profit of a sole prop can apply, definitely. And then if you have low cash flow in 2019 and 2020, don't underwrite yourself out. The program is designed to be flexible and approachable. So we're going to look at everything we can to try and get towards a yes. This is why I know I sound like a little bit of a broken record, but don't underwrite for yourself. Go through the process. Even if it's a no, we're not going to be upset by that. And we can at least give you some steps to describe how you can get towards a yes in the months to come.
Yep. Always need to make that effort. It's something I think throughout life, you always have to ask. People might say no, but you always have to ask and try to get as much information as possible. All right. Our next question was, it was stated that no collateral is required, but Connor also noted that a UCC lien on business assets. Please clarify. The application does ask us to provide what collateral we have to support the loan.
I think there's 2 parts to this. When you go through that initial kind of checklist in the kind of application portal, it asks about collateral. Although that is, I want to be clear, that's not used in our decision. So answer the question, but then move on. A UCC filing on business assets, what we mean by that is we're just going to take a filing and back of whoever exists out there on the business assets. In the eyes of a lender, that's probably pretty valueless. And what we're trying to say is if you're a small business concern, you might have, let's say you have a lease space and you have some tables, chairs, computers in that space, and you used a little bit of financing prior to to build out that space. Well, if you did that, then you already have a lender in first position on those respective assets. And also those assets, like the leasehold improvements, namely like the drywall or the tables and chairs, in the eyes of the lender, us, they have very little value to us. All we're doing as a lender in order to secure the loan is we're taking a filing, a blanket filing, in back of whomever already exists, whatever lender already exists. And we're just doing that to memorialize and secure our lien position specific to the loan funds that we're extending to you. So don't overthink that one too much. It's pretty standard in the lending world. What would be more onerous and more painful would be if we were exploring other types of assets like personal assets and personal residences. And to be very clear, this program is not doing that. All we're doing is taking a lien position in back of debt that probably already exists and a lien on business assets that in the eyes of the lender do not have a tremendous amount of value.
All right, we are down to our last minute, and I think I have a quick one here for you. We'll see, but the last one asks, are there any closing costs?
There are closing costs, but they'll be described to you through the loan application process.
All right, perfect. Well, I think that wraps up the time that we have for questions. So it concludes our program for today. I want to thank all our speakers for giving us your time and expertise today. We appreciate you all very much. And I want to say thank you to all our partners on the East Side who are working hard, very hard to support their business community. I want to make sure you bookmark this site. Well, coming up on the next slide, it's oneeastside.org/spark. There you will find key resources, information on our one-on-one no-cost advising, our weekly webinars, and grant opportunities as they become available. And a big thank you to all of you for participating in our webinar today. So until we see you again, this concludes our program. Thank you.
Thank you.